Good morning. Welcome to the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. We have an excellent panel this morning. I'm Harvey Freed, alongside of me, Becky Alley.
Hey, what is up, everyone? Happy Saturday and happy Motor City Pride. I think this year marks 50 years, so yay for everyone down at Hart Plaza. Be safe.
All right, Becky Alley, your partner over here, John Kolb, of course. John, also top 1% of all loan officers in the United States.
Wow, that's a big number. But hey, what's up, everybody? Happy Saturday.
You guys write a lot of business and you do a lot of good things, of course, for your clients. We're going to talk all about saving people money, how to buy a house. Of course, you bring in some of the best real estate agents Oakland County has to offer. Kevin Stewart, Jessica Zelke, Stewart Team Real Estate Partners, Rochester Hills.
Hey guys, how are you? Good to be in today.
Always great.
Morning.
I couldn't even figure out that color, Jess. You guys came in really cheery, bright, full, a lot of energy. You look alive and healthy.
Listen, I'm here for Jessica's blazer. I'm here for it.
That is a sweet-looking blazer.
And there's a lot of sunshine out today, so you have to dress a little bright. I feel like I didn't go bright enough.
I like that. Actually,
Go big or go home.
Nobody's bright enough next to Jessica.
Absolutely not.
John, we said we got a lot of people who like to talk mortgages and real estate in this room this morning. I'm going to back off it a little bit. My day's planned with getting some landscaping done and making our place look pretty, cut the lawn the other day. These are all the fun things about home ownership, the eye appeal and stuff. And this morning we get into a conversation, sure enough, about homeowners associations. They might have to stick their face in there once in a while to say, wait a minute, you can't do that.
Well, I mean, it's interesting because everybody has a different opinion on it, right? We were sitting in this room right here, and 5 different people had 5 different opinions on it. So, yeah, homeowners associations, love them or hate them, they're there. They're there to make sure that the neighborhood stays within a certain criteria and not go overboard, not paint something crazy pink and the house stands out and it's an eyesore. So, I'm going to pass off to Kevin because he had a lot to say about that. And hey, Kevin, you got to get your roof fixed, so the HOA's calling.
Yeah, no, I've always had a little bit of a mixed emotion on HOAs, and part of it is just understanding what your HOA is, and what they can and cannot control, what they can and cannot say, and understanding the depth of your HOA. So I think the general idea of a homeowners association is a good thing. I'm in a subdivision that has an HOA that I believe is very well run. I really enjoy the way that they do things. I think that they're there to protect the overall values inside the neighborhood, the overall look and appeal of the neighborhood. They do a very good job of our entryway. When you're coming in, it's a very enjoyable drive into the sub. So the things they do are great, but I've also seen some HOAs over the years that, they put some rules and regulations in there that to me are overly restrictive, that can get a little aggressive to the point of, I think sometimes going too far. So I go back and forth on them, but it's very important to know your HOA and know what you can and cannot do if you are going to purchase inside and purchase a property that has an HOA.
Yeah, and typically it's an automatic. A condo is going to have an HOA, right? So if you're looking and shopping for condos, you need to know what that HOA dues is, and then also what are you getting for that? Are you getting pools? Are they going to say you cannot put out the American flag? Are they going to say that you have to plant a cottonwood? Because I don't know who would ever plant a cottonwood tree. Anyway, but the point is just knowing what you're getting into. You can't just walk it blindly, and that's where getting in line with a real estate agent like the Stewart team, Jessica and Kevin, they are top notch, but they have the experience. They know what to look for. They're going to know when you're dealing with an HOA, what are you really signing up for and the restrictions that are going to come with it.
Well, and one of the restrictions we were talking about when it came in, and I'm going to let Jessica jump in on this, is she just recently had a deal that went south. It went sour after we reviewed the HOA. And part of the hard part that we have is we don't always get the HOA documents up front. A lot of times the seller or the seller's agent won't provide those because they're relatively large packages.
Yeah, it's a lot of documentation.
And won't always provide those until the due diligence period. Well, we had a buyer coming from out of state that was purchasing a property. And I'll let Jessica take the story from here because it was a little mind-blowing to us once we reviewed the HOA.
Jesse's master deed and bylaws.
Did they want the firstborn child?
Close. Yeah. So one of the things that was tiny and discriminate in the HOA was my clients have 3 dogs. There was a restriction of 2-dog maximum. And the two of the 3 dogs that they have were American Staffordshire Terriers. They're categorized as pit bull. Pit bull isn't technically a breed, but there was nothing we could do about it. We contacted the attorney for the homeowners association. They said it's a bylaw, so it's legally binding. And it had gone through over the last 12 years, a bunch of iterations where they removed the breed restriction and put it back in, removed it and put it back in.
Wow.
My clients couldn't purchase, and that homeowner couldn't sell their home
Wow.
because of a pet.
That does come up.
Bananas.
Now imagine, like, though, you didn't do your due diligence. You now own this
Oh,
house,
my
and all of a
gosh.
sudden,
Yes.
they're literally threatening,
Yes.
suing, whatever there's going to happen
Yes.
over this third dog. Like, I couldn't imagine. I have 3 dogs, right?
Yep.
So my little Chachi is going to be 19 on Monday. He's my little sweet angel baby. And then I have his son and daughter, but like they're like, I have
They're your
Chachi and his children,
family.
and they're my fur
Family
babies. Like,
members.
I couldn't imagine not having my little Chihuahua gang. Like,
Yeah.
it's just not going to happen.
No.
Well, and think it's beyond just the number of pets. It was the second half, which was a breed restriction. There was multiple types of dogs that weren't allowed to live in that sub, and our company, for example, had a very large problem with that. We have a pit bull, a Staffordshire Terrier, Jessica's dog, Buddy, that is in our office almost every day. Buddy is the sweetest dog you will ever meet in your life. He snuggles everybody. If you having a tough day and you had a rough phone call, he comes and puts his head on your knee to calm you down. He might as well be a
Lap dog.
Like service dog.
a service dog.
Yeah.
Like he literally could be. He is one of the best ever. And so we have a hard time when somebody says, "Hey, you can't have one of those because they're dangerous." It's going into a weird place for us.
Yeah, so get on the board, right? If you're buying an HOA, see if you can get on the board. Try to have a say in what's going on, and if you can amend these bylaws, because you can say if there's enough people, like you said, that's been added, removed. So if you're buying a property that's got an HOA, do the due diligence, review those documents, and make sure that you know what you're signing up for, because that is something that they're going to dictate what you can and cannot do sometimes.
Yeah, I like that. Actually, I'll end the conversation on the HOAs. The Homeowners Association, again, on condominiums, take a look at the bylaws, the master deed. And as a seller, I think it's a good heads up as a seller or listing agent. Reach out to those sellers immediately and say, look, I'm coming to your house to do the listing. Get your documents together so we can review those. And as we see now, the buyers are going to want to have those documents ahead of time.
Well, and also remember, when you get into a condo with an HOA, it can affect your purchasing power. We had a client that was qualified for a $300,000 mortgage, but when they went for a $300,000 condo and a $330 a month HOA due, it dropped their purchasing power way down.
Right.
Because instead of, you still need insurance. Because you have an HOA doesn't mean you don't need insurance. You still need your contents insurance, and it's not that much cheaper than regular homeowners insurance. And now we're adding in a $330 fee that we got to qualify you with, and it really affected their purchasing power. So make sure you're just talking to your, what do we always say, Kevin? Talk to your team, talk to your team, talk to your team. And these are the things you need to talk about.
Yeah, so typically on condos, so what John's saying is the insurance, your homeowner's insurance is cheaper because you're insuring walls in, right? The association is going to cover walls out. So you can get away with a cheaper policy, but that doesn't negate that $300 X amount per month that's going to be tacked onto your monthly mortgage payment. So with the rates changing frequently, it is dipping into people's purchasing power. So you need to actually advocate and let us know if you are looking for a condo, because it is totally different when we're looking to pre-qualify you and pre-approve you.
You guys, we said home ownership was going to be fun this morning. It's the Hardcore Mortgage Real Estate Business Show, and I'm just got a big smile on my face. I don't know if we can ever get off the HOA topic this morning as I'm thinking about how important it is for the budgets. And again, that's really where they've stepped in, Kevin, and let's talk about that a little bit. You're driving in these gorgeous subdivisions. The roads were built in 15, 20 years ago. Asphalt. We live in Michigan. That's a huge budgeting thing, and HOAs serve that purpose also.
Yeah, you have to understand the budgetary nature of your HOA, whether it's a condo or it is a homeowners association for a subdivision. You have to understand the financial stability of your HOA, because maybe they have pre-planned, they've set aside money, they've been responsible. If you're in a condo, they've set aside money for things like the roof and the windows and the concrete, but maybe they haven't. And we've seen it multiple times where we've seen HOA that has not done a fiscally responsible job of maintaining their HOA, and a buyer could get a huge assessment. That is a possibility. You have to be careful of that.
Man, you're right. Like all the things. I mean, literally, we could talk like 2 hours about HOA. We really could.
We'll do 2 hours on the HOAs. All right, you got on the Hardcore Mortgage Real Estate Business Show, brought to you by Capital Mortgage Funding. Keep it here. We're up till 10 o'clock. 248-539-9797. All of your calls. Alrighty, welcome back to the show. It's the Hardcore Mortgage Real Estate Business Show in our 23rd year. We are brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, NMLS 2289, equal housing lender. You can call us at Capital, 1-800-LOW-RATE, the best mortgage banker. Look, if you're buying a house, you need the experience that we bring to the table. Let's make this really good for you and your family. Successful home ownership is what it's all about.
Listen, I love when Jessica and Kevin are in the studio with us because literally we can throw at any single solitary topic, anything to do with mortgage and real estate, and they are going to be knowledgeable, experienced, and they can really add just real value to the conversation. So if you're out there and you're listening, give us a call today, 248-539-9797. I want to hear what your experience has been like in this market, right? We're looking at a little bit of it's normalizing, right? We've seen the rates shift dramatically, right? And it's changing the way people are buying their homes. Concessions are now on the table. You know, I feel like buyers are getting a little bit, they're pushing back. We're seeing more offers with concessions, things like that. So we definitely want to hear from you to see what your experience has been like and what kind of success stories have you guys had out there right now?
We've seen a lot of different things. We'll call it, you know, you're hearing correction, you're hearing retraction, normalization. Yeah. You know, we talked about Wednesday stabilization. We talked about all sorts of terms, and all of them have a little bit of clout side to side. But the truth is the market has taken some strides to become more even over the last couple of weeks. It does happen that fast. People think it does, and it takes a long time. It may take a really long time for any major price change to happen. I don't think prices are going to retract for a while. I don't see that happening. I really don't. But I think that now buyers have the ability to actually go in and make qualified, educated decisions on properties instead of just having to go and throw everything and anything against the wall, hoping and praying and fingers crossed that something sticks. Because that's what they were having to do. But now I think they actually have the ability to make an educated offer and go in and do things the right way, which to the overall strength of the market and the strength of the ability for it to continue to rise in a sustainable manner, that's a good thing.
Yeah, we were talking about it on the podcast, right, where it's not the rates that the issue is. It was the $20,000, $30,000, $40,000 over asking on top of the fact that the property had repairs. That is not sustainable for most individuals, okay? I don't know a lot of people that have $20,000, $30,000, $40,000 that weren't already homeowners just chilling on the side, right? Your average first-time home buyer is not having that kind of money, and they are getting really beat up with going against these repeat buyers and investors.
Right, and you're going as soon as you purchase with that crazy guarantee over asking, you're in the hole. The house isn't worth it. It's not going to appraise for that. You're, in the hole. But the hope is, get into the home, spend time. It's not your 1-2 year home anymore. It's more like a 3 to 10 year home where you're going to have to stay there so that the equity catches up to what you purchased it for, and you can still be a successful homeowner. I mean, but we aren't seeing are you, Jessica, I know you make a lot of offers every single day. Are your offers with the appraisal guarantee and or over asking by a certain number?
No. Most of my clients, especially in the last 30, 35 days, are going in and asking a couple grand over. No guarantees, no waiving of the appraisal with a full inspection contingency. So I know we've talked about that before with that as is. We're not even doing that. And they're successful. They're getting the bid. They're winning the multiple offers.
Nice.
All right. Hey, guys, we will go to our first caller this morning. We've got Steve calling in. And good morning, Steve. Welcome to our show.
Hi. How are you?
Real good. What do you got going on?
Well, this might be off topic for the day, but I just wonder, I've got a home that I've owned for 35 years. I don't want to sell it. It's paid for. And I wonder about the wisdom of buying more property, not necessarily a home, maybe just a parcel of land someplace. With everything, it's hard to find a place to invest your money. And I don't know if now is the right time. I've heard real estate people say, wait until the housing recession happens in 2023 before you do anything, because you're going to find a lot of deals. I'm like, well, okay, but nobody has a crystal ball.
I'm going to let Kevin and Jessica take this one. I don't know who you've been talking to, but I don't think they're going to tell you to wait.
Yeah, I'm chomping at the bit on this one. This is my wheelhouse right here. I do a lot of real estate investment myself. I have a lot of clients that do a lot of real estate investment. I am a huge, huge fan of buying dirt. And this is the reason why. I think there's a massive amount of volatility outside the real estate market. We've all seen that this year. The amount of volatility inside the stock market is excessive. There is not that type of volatility when you buy real estate. When you buy investment properties, when you buy second properties that you potentially could use as a vacation home, but also use as an Airbnb. I mean, there are so many options and opportunities out there for it. So the question I would have for you, Steve, is this something that you're looking to invest your money into as a long-term hold that you want to make a monthly income off of? Are you wanting to have a cash flow source?
I don't know. Again, I told the screener, I'm 67. I still work, and I love my work, and I don't want to retire. And I don't want another piece of property to take care of either, necessarily. I'm glad to hear what you just said about chomping at the bit or salivating, whatever it is you said about you're a big advocate of buying dirt.
I'm a huge advocate of it, and I believe that you can create a cash flow for your family that allows you to continue to work, but work different. You now get to work on the things that you only want to work on. A lot of people think that if you own property, you're going to spend all your time managing that. That's not necessarily true. We manage property as well. And there's a lot of companies out there that are very, very good at that can provide you a good income-bearing property, manage it for you. They take a little bit off the top, but they take away all your worries. You don't get the phone call on Christmas Eve at 10 p.m. That's not going to be a thing. But what you do get is at the beginning of the month, a check that you can use towards
I like to call that
cash
mailbox
flow.
money.
Mailbox money, yeah. And you can. We have clients that own 1, 2, 3. We have clients that own 70 to 100 properties that will never have to work a day again in their life because they have so much mailbox money.
We'll get you guys hooked up definitely this week then. Steve, you'll call, you'll reach out to each other. We got to get you excited about seeing some of this dirt or some of the opportunities out there.
The land that's out there it is what it is. I mean, they're not making more land, right? So if you have an opportunity, should you be so inclined to afford that second piece of property or that land to build something on, to make a legacy for your family, whether it's something that's going to be a second home, like Kevin said, or it's going to be an investment property, whatever it's going to be, there is an opportunity because regardless of what's happening in the economy, relatively, if you look at it, real estate holds up very well in recessions. And, like obviously inflation, you have the people that are landlords right now. I mean, renting is even an option. I mean, really affordability for everyone else really is the topic. But if you're in a position to buy property, I don't know who you're talking to, but if they said, wait, you need to reevaluate those conversations.
And trying to time the market on that is almost impossible.
Yeah.
Trying to time it doesn't make sense. It's still about evaluating the cash flow position. And so you have to understand where you're buying and what your overall goal is. And you can find investment opportunities in any market. It doesn't matter what the market is.
Well, you don't have to time it, right? Because you can, like Kevin was saying, you can buy now, and if you're getting the house for a little bit more, what do? You just increase your rents to offset, right? So your interest rate doesn't matter anymore because your payment doesn't matter anymore because you can offset it by just increasing your rents.
And in down markets, you want to own property because anytime there's a down market, rent increases every single time. So if you already own that, then you can leverage with banks and you can go buy more property when the market does go down, if it does go down. So it's all about a long-term strategy of what you want to do and how you want to make money with dirt.
All right. You are listening to a master class on 97.1 right now. That is for sure on the Hardcore Mortgage Show. I love it.
I like that too, Becky. 922 if you're joining us June 11th. Becky, we're halfway almost through the year. Appreciation's at 9.5% for sure, maybe 10 to 15% in a lot of regions across the United States. And even here in Michigan, we're already seeing halfway through the year, 2022 home appreciation might end up at 10%. There's another reason why. Why are you waiting?
Absolutely. I mean, we have been year over year double digits as far as appreciation and home value. So if you bought within the last 2-3 years, you're seeing that overpaying really did benefit you because the homes are appreciating now. If you're to go look at it, the same people we talked about it before. If someone were to tell you in 2006 you're going to lose X amount of value on your property, would you have still bought that house in 2006? Yes. The answer is yes, because you still needed to regardless of the situation. So if you're buying in 2022 with the market normalizing, it's still going to make sense. And if your home is now appreciating at 5% or 2% versus 22%, it's still a good investment. You're investing in yourself, not somebody else.
Yeah, it's still appreciating. That's the key. It's still appreciating. And even if it were to go backwards, it's going to come back up. It always does. It always has. Even in the largest market crash we ever saw, when it fell in 2007, 2008, I had a front row seat for that. I was young in the business, but I watched that thing go all the way down. And I wish at the time I'd had more people purchase properties inside that market. But even the people that lost value, they now gain that back plus probably another 20%. So, and they still had to have a place to live.
Yeah.
Homeownership matters. No matter what, you are going to have a monthly cost to put you and your family somewhere.
Look,
That
the reality
always
is
gonna
like
happen.
from my life experience, so I was one of those people that bought a house in 2006. I was 24, right? I was new in the business. I was in it. I was experiencing it, but then I also was seeing like the downfall of certain things, right? We're not ever going to see something like that because these are well qualified mortgages. It's a totally different situation. There's a lot of cash in these properties, but I held on to that property and I'm glad that I did because now I'm reaping the benefits of it because it was a temporary pain for me to see the growth on the other side.
All right, Department of Housing and Urban Development had strong initiative this week to connect communities with the builders and what's going on. There's a supply shortage, Kevin. It's killing us, Jessica, is it not? We need more homes, and hopefully they're going to reach out to the communities with changing some zoning, maybe switching over combat this problem by switching over some commercial properties and zoning into residential. We've seen some of that uniqueness in the marketplaces across some of the downtown cities where you see, wow, that was an old whatever it was, and now all of a sudden they can build 6 or 7 condos. Pretty cool stuff as we try to get more and more homes out on there in the marketplace. It's going to be a struggle. Hence, this inventory is driving up the sales price.
Yep, absolutely. Creating of inventory and creation of inventory is what's going to be important over the next couple of years. Very important.
Keep it here. When we come back, we're going to talk all about buying and selling. If you've got a question, 248-539-9797. We'll be right back. Welcome back to our show. It's the Hardcore Mortgage Real Estate Business Show. We are brought to you again by Capital Mortgage Funding. Give us a call, 1-800-LOW-RATE, the best mortgage banker. Get that real approval letter, not just a pre-approval. Pre-approval means a lot of pre-trouble. Make sure you definitely get a real approval letter. Again, call us at Capital or join us here on the show, 248-539-9797. I'm Harvey Freed, Becky Alley, John Cole from Capital Mortgage Funding, Fairway Independent Mortgage Corporation, one of the best mortgage bankers in the nation. You guys are some of the best real estate agents right here in our region. Kevin Stewart, and Jessica Zelke, of course. Stewart Team Real Estate Partners.
Right.
Get it in there.
A combined name? That's interesting.
A combined name. Stewart Team Real Estate Partners. That's where you find them.
I feel like I don't know why we haven't done that before.
All right, I'm going to go there with it. Costco Gas. That's the place I've been headed to. I got that Costco card. I'm not going to prop them up too much. The stock flies off. Anyways, you can barely afford that stock. Probably the only thing that's going up. But I've been getting gas there. Folks, couple things. Gas is expensive now. We know that. We're going to tie this gas thing into pre-approvals and driving around people. I'll tell you, well, first of all, there's like 8 pumps at Costco. They do reach on both sides of your car. So pull in there and move it over to the right-hand side. Get me off at Telegraph so I don't get slammed like the other day. Scary getting to the pump, Jessica. More importantly, scary if you have unapproved buyers in a car and you're driving around at $6 a gallon.
Oh, yeah, shoot. It's all about preparedness. And I feel like it's a bit of a broken record with this group of us here. But absolutely, yeah. If you shouldn't be, we as Stewart Team Real Estate Partner would not be putting you in the car to go look at houses if you did not first establish your budget. There's so many emotions around what is happening. You have to make very quick decisions. And if you don't know what that budget looks like, this is going to be a huge issue. It's going to be a tougher issue. And even with the experience that we have in the marketplace and the experience that we have in real estate and having a great team of lenders, if also the buyer doesn't understand what that budget looks like, you shouldn't be getting in the car first and foremost. And we want to make sure that you are prepared on that budget before we go looking at houses.
And you notice she said budget. She didn't say how much money you can spend or what's the maximum amount that you can borrow from a lender. She didn't say that. She said, what's your budget? Because your personal family budget is what should dictate how much house you buy. And a great lender is going to have a full conversation with you about how much money should you spend and how much money do you want to spend. And then what does that interpret into with all of the things that circle back to like homeowners association dues, taxes, insurance, and what does the overall monthly payment look like? So I love that Jessica used the term budget. We talk about that with all of our clients. It's very, very important to us because your monthly budget and your monthly payment is your monthly reality.
1,000%. I always say that you want to be married to your spouse, not your house, right? And just because on paper I can say that, yes, you are poo for $500,000, that doesn't mean that $500,000 payment fits into your budget because there's things on your credit and things in your life, things that come up that I do not see on your credit report. We're basing everything of what we see. So you have other things. You got kids sport. I mean, kids sports are expensive.
Oh,
okay.
boy.
So you got that too. So you got a lot going on. And I feel like on the buyer, because like Jessica is like specialized on the buyer side, right? So when someone's like, hey, can you show me a house? I feel like your question is, are you ready to buy this house? I can show you whatever house, but are you prepared to buy this house when we go see it?
100%. And right now, John and I are working with a buyer that he does have purchase power to spend a lot more. And we had multiple conversations together. We got on the phone with him together and discussed through. He's a first-time home buyer. He doesn't want to take his budget to the max, specifically doesn't want to be house poor. And we've set him up for success. And he is buying a condo, but way under his means, way under his budget, which is going to be great for him.
Yeah, we've had like Jessica said, we've had multiple conversations. I've had conversations with him and his father just because he wants to make sure that he's getting his team put together and getting all the right advice. And like Becky said, we want to make sure you're a successful homeowner. We want you to still be able to go out to dinner, still go on vacation, still enjoy life. Don't want you just working 9 to 5 every single day and on the weekends just to afford your home. That just doesn't make any sense. So be a successful homeowner, make sure you get your budget in play, and do it the right way.
And there is a massive amount of real estate brokers, real estate agents, mortgage reps, tons out there that will do nothing but preach to you how much money they want you to borrow because that's how they get paid. And it's unfortunate. I will say that boldly, that a lot of them will do that because they're looking out for them and their family, not you and your family. This room, we look out for the families we take care of.
Yeah, there's power in the word no, right? And when we're saying no, right, ultimately you are going to be the one that's in the driver's seat. This is your biggest financial investment, right, if you're buying a house. we're going to give you our honest opinion. I'm going to talk to you like I'm going to talk to my brother, my mom, my cousin, anybody, because I'm genuinely invested in you and your success, right? I feel like I'm carrying your emotions with me, and I know you guys all do too, right? So when we're having these conversations, we're making sure that you feel comfortable. And it's not about, because me personally, I'd rather live under my means than even at my means, because you can't control certain things in life. You have to anticipate worst case scenarios sometimes. And it takes a village, like you're talking about. It's these multiple conversations, a lot of hand holding, and it's a lot of conversations. We were just talking about this, Harvey, at 11:30 at night sometimes.
Yeah, we do have these crazy calls. You brought up a lot of things. My head's spinning right now with a few things, but when you said travel, sports, that was one of them. You know, it's not part of our debt to income ratio calculation, and that's a huge number. And again, if you have kids that are, you know, in soccer or whatever it is, hockey's outrageous. Any of the sports nowadays, it's an added expense that doesn't show up in your debt to income ratio. How come? I always feel this way. The smarter and best clients that I have, they talk to me more. They communicate with me more. I know their parents, first-time home buyers. The folks out there, look, if you're clicking buttons, and if you're offended by this, I'm sorry. If you're clicking buttons on Zillow at night, you got to get off of that. That is the worst recipe for, I think, home ownership nowadays. And it really blows my mind. I mentioned this week. Shame on the MLS for not allowing free access to everyone, because they don't know where to get these houses. You got to get off Zillow. We got to get you set up with a real approval and real estate agent.
And to a degree, the MLS has tightened that information because they want you to speak with us. They understand that, hey, you having free reign of information to a degree can be harmful, because Zillow gets their information from the MLS. So does Realtor.com. So do a lot of the other major search sites. But what they don't do is provide the knowledge behind that and the conversations and the qualifications behind that. That's where the truth is. We need people to pick up the phone and have the conversation with us so that we can guide them properly with a full circle team.
And Jessica can speak on this, I know, because she's really dealing with the buyers on the regular basis. Buying a home can be very emotional, right? And our job as the professional team that's surrounding you is to uncomplicate what can be complicated, right? And it doesn't have to be hard. As long as we paint that picture right off the bat, it can just be smooth sailing. But our efficiency is contingent upon your efficiencies.
Hey, guys, let's go to this call here. And then, of course, we want to hear from Jessica and Kevin all morning long. 248-539-9797 till 10 o'clock. Let's go out to our call there. Good morning. Welcome to our show. Hello, you up there? Oh, just hold on a minute there. We will go back to that after.
You're too quick, Harvey.
We're too quick. Well, look, we were throwing out some great information about mortgages.
Bueller.
I'll go on to my next topic. Hey, John Cole, let's go over to you on this one, because this is coming up quite a bit. John, a lot of our families and friends, more people are self-employed than actually have W-2 jobs. So that could be a 1099 job. It could be where you're doing a Schedule C. John, if you've been self-employed for over 5 years and you didn't do your 2021 taxes, that could be the year that you show all your income, because sometimes, John, we can get you approved with just 1 year tax return. Explain that a little bit more.
Yeah, I mean, there's certain programs out there that we offer where if you've been in, like Harvey said, in your position and your company for 5 years or longer, that we can get away with a 1 year worth of tax returns. And excuse me, if you wrote everything off in 2020, but in 2021 you're going to show your truckload of money, then yes, get those taxes.
The truckload of money's coming in.
Where do you get the truckload of money?
You back it up.
Seriously.
So no, it's one of those things where if you just got to plan the right way. And I've done this with many clients where, hey, let's plan before you do your taxes on what you're trying to do, so that we can make sure that you're going to qualify, and then you can go back next year to writing everything off and showing $0 of income.
If you're trying to buy a house, you got to document it.
Yep, you got to do it the right way.
All right, let's go out to our call. We got someone back up here. Hester, hey, welcome to our show. Good morning. Bill, good morning. Welcome to our show.
Hey, good morning, guys. Love the show.
Thank you. Go ahead. What's your question?
Yeah, I was thinking about starting to invest in some rental properties, but I've kind of heard horror stories about landlords that, things happen at the property, and sometimes the tenants sue the landlords. I'm curious as to how do I potentially reduce personal liability? Is it additional insurance? Is it setting up an LLC? I'm just kind of looking for some advice.
That's a great question. I enjoy that one as well. So when you purchase that property, you do want to do some things like create an LLC. I like, if you're going to buy them one at a time, creating separate LLCs. That is going to be a nice hedge of protection for you, so they can't come after you personally. So you're going to want to set up some documents on the front end. Insurance is going to be very important how you set that up. And a lot of it does depend on what your long term is on that. Or is it buy and hold? How many years? How many do you want to buy? It's all about the full picture. But things like setting yourself up with LLCs to cover your personal liability and proper insurance to cover that as well is extremely important, and having a properly written and documented lease. Sometimes that can indemnify the owner as well. So those types of things are very important if you are going to get into the rental investment opportunity.
Okay.
That's a good way to go, Bill.
Yeah, no, I appreciate it, guys.
Hey, Bill, let me throw this at Kevin. I'm going to ask him a question on your behalf. Hey, Kev, it got a little sticky there when the government during the pandemic said, hey, there's a hold now. You don't have to pay your landlord. That was a little weird.
It got extremely sticky. I owned a lot of property during that time, and it was
and you still
extremely
got to pay
sticky.
your side.
Exactly. We still have to pay our side. We still have to cover insurance and property taxes and any borrowed monies on that. It did get sticky, but you want to know what? Even though that was out there, there was a lot of provided opportunity on the back end. The state of Michigan thankfully jumped in with some opportunities. We were able to pivot over to helping some of our tenants qualify for some state grant type money that allowed them to cover and bring back their payments and get them whole. So we were able to actually provide an extra opportunity to our tenants along the way that our company was able to kind of work through with people. So when that stuff does happen, it can be extremely scary, but you just have to hold on tight and do the best you can along the way.
Yeah, I think that you really answered all of like that directive very great always, right? So it's letting him know, like, we're going to hook you up after the show, make sure that you guys are connected. But there's a lot of things that go into when you're stepping in that arena, and it can be nerve wracking, right? I hesitated even myself, right? Because like, oh my gosh, what if the plumbing is busting, and then you got to do all these things. There's all these extra liabilities. So you got to be knowledgeable, you got to be educated, and we're with the top real estate agents in Michigan right now that have well-versed. So, definitely keep it here right now.
All right, you're listening to the Hardcore Mortgage Show, brought to you by Capital Mortgage Funding. Give us a call, 248-539-9797. We'll be right back. We are back. All right, good morning. If you're just tuning in to the Hardcore Mortgage Show, of course, we are brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation. You're on there. Oh, we're doing good over there. All right, we're still taking your calls. 248-539-9797. Everyone's multitasking back there. James, you're doing a great job getting those calls that are all coming in. Of course, I'm Harvey Freed, Becky Yaley, John Culp talking mortgages, Jessica Zelke, and Kevin Stewart, of course, talking on the real estate side. Kev, I didn't know you were that into all of these rental opportunities and investment. I'm really into it myself. As the stock market changed so quickly at 2022, anyone looking at their 401k at the beginning of the year and looking now, they're like, what? Why didn't I diversify some of my assets out there? So again, real estate's been this other thing, but you got to be very careful. And then a couple other things that popped up in our last calls, putting these rental properties in an LLC. Well, if you ever want to pull equity out of them, you got to put them back, claim them back into your own name if you're going to do a cash out. So there's all these little things that happen in real estate and mortgages, and we're here to answer those questions.
And before you answer that, right, what I want to point out is the fact that you're so knowledgeable on all these things because you have the experience. You're not someone that's just been in the business for the last 8 years and only has experienced these amazing rates, right? Both of you are very well-rounded because you've experienced it, you live it, but you also preach it. And, so when someone's aligning with you, you really have like that full circle to really give them all that experience and knowledge.
Well, I'm coming up on 18 years in the industry. So
Yeah.
I've seen, same time. Hey. So, I've seen so many different nuances and so many different opportunities and seen that every real estate market provides opportunity. And the investment conversation came in years ago with us, and we have an investment wing of our company. We actually have a director of investments that qualifies and searches and researches investment opportunities for our clients constantly. And we actually have a property management wing of our company where we manage properties for our investors that want to make that income a little more passive, that don't want to get the phone calls late at night. We manage that for them as well. So it's one of the things that we've grown slowly, but I think that the next handful of years is going to provide incredible opportunity for investors. I think it's been good recently, but I think you're going to see a lot more of that over the next couple of years because people are realizing how volatile the stock market is, and there's a significantly less volatility in the real estate investment market.
Right. Harvey, do you remember when your 18-year anniversary came up? These babies in the room. No, I mean, seriously.
Yeah.
You grandpas.
We all can't be as adorable as myself and Becky.
Sorry, you
Yeah.
guys are totally adorable.
No, but you really do need to be with somebody who has, like Kevin's saying, been through the markets, right? If 6% doesn't scare us,
Not even a little.
I always say, give me this market all the time because it really separates like the professionals in the room. And you can really tell when you're in the room with someone that's just been in the market or been in the business for a short period of time. And I'm not knocking, people out here are hustling. I'm not knocking, if you haven't been in the business for 1,000 years, right? That's not what I'm saying. But sometimes they get a little bit too arrogant because that's, so now when this market was shifting a little bit, they didn't know how to handle it. And, so that's why I was like, you give me this market because we know how to handle it. And we know how to maintain ourselves and be professional.
And we have great agents inside of our company that are newer into the industry.
Sure.
That's fine. There's nothing wrong with that. But they are always able to come to myself and Jessica and talk through the different nuances so that they can provide the best service for their clients as well. It's not just their experience. It's now all of our experience. They get the full package with our company. So when somebody hires us, they don't just hire Ariana or JR. They hire Ariana, JR, Jessica, myself, all of our back-end staff. They hire the entire company to take care of them. That's where we separated ourselves and decided that we were going to commit to creating a better long-term financial and better long-term experience for our customers.
I love that. I love all of the things that you're saying.
Yeah, that's exactly how we do things at Capital as well, right?
That's why it speaks to my soul.
Every single day, Harvey and I have a conversation about what would you do with this instance or not, back and forth. And that's just part of being good at your job is that you got to go out there and say, hey, Harvey, have you come across this before? Because I have not. Or, hey, Becky, what do you do in this instance? And we work together. And, she's not getting paid on the loans that I do, but she's there to help because that's what a good loan officer does.
And that's why at our company, it's so important for us to work with you guys consistently. And we try and we do the best we can to connect our clients to you because we understand that you do things the same way we do. And there's a cohesiveness there. And we understand what you're doing it for and why you're doing it. It's more important for you to take care of the person that is there to purchase a property or borrow money. You're doing it the same way we are, and we've always appreciated that. And I believe that's why we work so well together because our mindset is aligned.
Quality is always always top of mind, not quantity. Because you can talk to 100 million people, but you're not going to be able to give them that service. You're not going to be able to give that one-on-one individual attention that is needed in this market right now. So, Jessica, I want to kick it to you real quick. So, setting up these buyers for success, right? We're seeing a little bit of a balance. Buyers have a little bit more say. You can come back on a bad expansion and say, you know what, I'm going to ask you for 2,000 concessions, right? Whereas 6 months ago, the seller would have been like pish posh applesauce, right? Where I'm not going to deal with that, right?
Right.
So, what are you doing right now to set up the buyers for success? And also, I want you to touch on, is that highest always best?
So the biggest piece is we are taking the time in the house. It's still going to feel quick. This process is still going to feel quick, even if we didn't have the speed of this market. To a buyer, they see a house for what? 20 minutes, 40 minutes. So we walk through everything. I'm going through things that I believe could hinder their ability to finance the property, things that are going to be possibly expensive for them. Now, of course, I want them to have that opportunity to take their inspection. And again, yes, we're having the opportunity to take inspection. It is not always the highest price that wins. Your terms have to be strong. You need to have a pre-approval letter. You need to have a lender on the other side of that pre-approval letter that's going to answer the phone when the list agent calls to verify. Now we have a little bit more time. We as professionals have a little bit more time. List agents are calling on those pre-approval letters when they get it for their buyer. So you don't have a lender that's going to pick up the phone to verify. They're going to go to the next offer. And
on a Sunday night.
100%. Saturday night, Friday night,
Yep.
all of these offers and these highest and best are happening over the weekend.
They're waiting for the open house to finish, get all the offers together, analyze them all, and call you on a Sunday night.
8:30. Yeah.
I can't tell you how many times I've had sellers in the last 6 months choose an offer because the loan officer picked up their phone.
That's how it works.
Because they asked me to call and verify the top 3 offers, and only one loan officer answered the phone. The others, I get a call back maybe 2 days later, and sometimes never.
Crazy stuff.
And then that buyer wonders why they didn't get the deal. Well,
That
the
makes
reason
my
you
head
didn't get the
explode.
deal
Like,
is because your team didn't do their job.
Hey guys,
Yeah.
inflation fastest pace in 40 years. We know the inventory has been the talk of the town for at least the last 2.5 years. Are more and more people packing up? Our retirees? This is a tough winter here in Michigan. Are soon-to-be empty nesters going to head south and open up these houses for some inventory? What are we looking like here towards summer's going to kick in here in another week or so? And then, of course, we'll be into the fall of 2022. What does the inventory look like?
Inventory right now is still low, but I think it's climbing. It's in the process of starting to climb. It has climbed the last couple of weeks, not to a point where you think, oh my gosh, there's a lot of houses for sale. Guys, there is still not a lot of houses for sale. We're still at a very, very low inventory point, but I do think that could change and increase. Yeah, I think that there is going to be a lot of people that are moving south. Now, the question is going to be, is now that people have seen some of their retirements go to pot over the last couple of months, is how aggressive are they going to be able to be in the Florida market? Right. If you go down the Florida market, you think it's rough here. Holy cow.
Man.
Yeah.
Unless you are cash heavy, you're going to have a really hard time buying down there right now. And so I think some of the people have actually timed out that conversation. I do think that you're going to see some people, because they feel that it's falsely inflated down there, they are a little concerned. I think you're going to see people continue to buy property up north. I think you're going to see people making sure that they have great summer properties that they can spend time with their family. And then I think you're going to see people that are going to hold on a little bit tighter for that property down north. And you're going to see empty nesters that are going to start downsizing. I do think you're going to see that over the course of the next, 2, 3, 4, 5 years. You're going to see a lot of people that are moving out of the larger home and into the smaller home because they want simplicity. They are setting themselves up for the Florida house. And so they want to release and relax their budget by moving downward in size.
To that point, I have a client right now where he is a CEO for a certain company, and he knows he's going to be retiring in the next 2-3 years. So he built a home in Florida, did the new construction thing that obviously got spread out because of the shortage of getting the supplies that they needed to finish the property. But in anticipation of his retirement, he has it. He already has it locked down. We just closed on it last month. But you're right. He was having those conversations in advance, seeing his retirement deplete a little bit with the market, and he's making sure that he has his assets in line while he's still working to maintain any kind of overhead that he might have had. Because once he's retired, right, we all know you make what you make. It is what it is. You can't go work those extra hours anymore.
Right. And you got to talk to your people about that. Kevin and I share a financial advisor, and we talk to him twice a week just on things like about that.
Oh, yeah.
Just planning and making sure you're doing it
All the time.
You guys, another great show. I want to thank everyone, of course, for coming in. Stewart Team Real Estate Partners, Kevin Stewart and Jessica Zelke. Always great to have you guys on. Tons of knowledge. Check them out in Rochester. They're right downtown. They got their own office and the whole deal. Want to, of course, always thank the great Becky Yaley, John Cole for sharing their wisdom with us. Again, keep it here on 97.1 The Ticket. We got Tiger Baseball coming up later today. Pat Caputo will tell you about Andrew Chafin. He's bringing that nasty slider this afternoon. Hopefully the Tigers get back on their winning ways. Keep it here. We'll see you next Saturday.